So crash 300, this is what I'm looking at. This is our current lookout right now. We are looking forward for the market to start crashing. First area that we are expecting is this trend line, and it's almost approaching this trend line. The 1 hour candle, it's almost approaching the trend line. As you can see, it's almost approaching the trend line. Once it starts crashing from there, I want you also to look out for this area here. This area here can also be an area where someone can scale in if it breaks this zone. Why am I saying that? 1 hour supports as well, they are also significant. They also can hold longer. If you check here, 1, 2, 3, 4, 5, 6 hours, it failed to break this support here, right? So meaning right now, if ever it starts crashing from there and it breaks this immediate support here, that can also be an entry point for more selling positions. So first sales we're expecting here, right? Next ones, that support. Other ones, this support. Then we just hold all the way to the first target, which is that area. You can also look out for this zone of support as well, because the market can actually do some things there before just going. It can just play around those areas before it just goes where we are expecting it to go. So that's also another level that can actually maybe be respected as well before the market proceeds. So right now, crash 300 is almost approaching the zone. What you simply do, you simply go to my favorite entry time frames are 15 minutes and 30 minutes. Why 15 minutes and 30 minutes? 15 minutes and 30 minutes, they rarely face manipulation when it comes to setups. The setups that we have there, they hold longer than your 1 minute to 5 minutes. 1 minute and 5 minutes, they can easily be manipulated. You discover that someone who might try to enter this based on 1 minute or 5 minutes, on 1 minute and 5 minutes, it can actually come and break this trend line. Then later on, you see it crashing back inside, which is, it happens every time. 1 minute, 5 minutes, they are always manipulated. So rarely, if ever that trend line is going to be respected, rarely do you find the 15 minute or the 30 minute or even the 1 hour breaking that trend line. If ever that trend line is going to hold, really are you going to see the market closing above outside, then maybe coming back inside here. If ever that trend line is going to hold 1 hour, 30 minutes, 15 minutes, all of those ones, they have to respect that as well. That is why once I get the 15-minute confirmation, let's say the 15 minute, it crashes on the 15 minute, gives me a bearish engulfing, or give me a shooting star, or a hanging man. A hanging man is simply the opposite of a hammer. A hammer, you see a hammer by something like this. The body will be like this, then the tail will be like this. That will be the body, and that would be the tail, something like this. This is a hammer, right? Then the shooting star is the opposite. The hanging man and the shooting star is the opposite of a hammer, which is something like this. It will be at the top. So the wick will be at the top like this, then the body at the bottom. So once I get that on the 15 minute or 30 minute, I enter my trade here. I enter my position here. My stop loss just above this wick like that. I enter my stop loss just above there. I enter. Then my targets, I have marked my targets already on a higher time frame perspective. So analysis start from the higher time frame. Entry point, we get it from the lower time frame, 15 minute, 30 minute, 1 hour, we get our entry points. Analysis, daily, 4 hour, daily 4 hour, daily 4 hour. That's where you get the clear picture of where that instrument is coming from and where it is going. Are we together?
Yes, yes.
So if you can check, it's most probably going to bounce. If you ever respect the 61.8, that is a good confirmation, because we have the Fibonacci 61.8 as well as the trend line. That is a very good trade, a very good one to enter, a very, very, very beautiful trade to enter. If you're on your account, if you're on your MT5, whatever, that would be a very beautiful opportunity to enter right now, if ever it starts respecting from there. Right now, this 1 hour candle, it has 22 minutes to close. Let's look at the 30-minute candle. Let's see how far it has to close. 30 minutes also has 22 minutes. So roughly one can actually enter based on the right now, what time is it? Right now it's 7:38, meaning maybe the 15-minute candle is going to close at 7:45. So roughly, if ever the 15-minute candle crashes and respects the zone, you can actually enter based on that. But the best confirmation that I always wait for is when you see the 30-minute candle actually respecting the zone. So this 30-minute candle, once you see it actually respecting the zone, that to me, that's a solid confirmation for an entry. That's a solid one for an entry. A solid one for an entry. 15 minute as well. 15 minute as well. Here and there, they play around with 15 minute here and there. They play around with 15 minutes, they manipulate 15 minutes here and there. That is why 30 minutes is the best time frame to enter. 30 minutes. Start from the 30 minute. 1 hour is also okay. 30 minutes is good. 1 hour is also okay, in as much as it can give a bigger stop loss. But 30 minutes is okay. 30 minutes is okay. 30 minutes is a very stable one because it's in between the 1 hour. It's in between. It's in between. It's a time frame that is in between. So it's actually more stable than the 15 minutes. The 15 minutes is not in between. It takes parts of the 1 hour candle, but the 30 minutes, it takes half of the whole 1 hour candle. That is why it's more stabler than the 15 minutes. So right now, you know, the 15-minute bounces and respects there. We can as well enter. We can as well enter. Then when you see the 30 minutes now, and also the 1 hour, when you see the 30 minutes and the 1 hour bouncing there, respecting there, something like this, giving us something like this, or something like this. This is what we are looking for here. Something like this, something like this, or something like this. Something like this or something like that is something that we're looking forward to here. Once we get that, we enter. Once we get that, we enter. Once you get it, you enter. Your stop loss above the wick, just above the wick, like that. Your target, we have analyzed the higher time frame, and our targets, we base them there on the higher time frame. If ever you want to look at the lower time frame targets, you can also consider them. But me, I like to hold trades based on my high time frame analysis because that's a more better reward. Unlike someone who's going to enter, come out, enter, come out, enter, come out. Why didn't you just hold then the trade and scale in positions than trying to enter and come out, enter and come out, enter and come out. So according to me, first target is this area, then the second target is the trend line, which is somewhere around this area. So here we are, crash 300, the setup is ready. Once we crash there, we enter. Then if it doesn't crash there, we are looking forward to this level here that I've just marked. If it respects this level, you can also enter on this level as well. So 2 entry points, either we sell there or we sell there. Those are the 2 entry points that are looking forward for sell positions. So crash 300, I think we are done. We are done. So that is my bias. That is my expectation for crash 300. Any questions?
Yes. No questions. Let's go to boom 300.
Wonderful. So crash 300, guys, it's almost ripe. It's almost ripe. You can as well wait for the 30-minute candle to close, or even the 15-minute. Once you get either a bearish engulfing or shooting star or a hanging man of 15-minute, you can as well enter there. Your stop loss just above the wick there. Then your targets we have marked the targets on a higher time frame. Use the higher time frame targets. Unlike entering there, then after 1-2 crashes, you see people coming out. What is that? That is not trading. You're not trading. Basically, you're not trading. You're simply a gambler that is playing. You're not yet sure of what you're doing. You're not yet sure there, because even when you wait for one spike bar, then you say, "Hey, I'm coming out. I'm coming out." What is that? You're not trading. You're not trading. You're not trading. So traders, we really are stable. We really are calm. We wait for the market to come to our targets. First target, once it comes here, once it breaks this support, we scale in. Once it comes to this support, we look at the response of price on the support. If it rejects here, we just shift our stop losses, just above the candles there, so that if it breaks, we're simply going to hold our positions all the way to our target that we have marked on a higher time frame perspective. Not the scenario whereby we have 1 crash, 2 crashes on a 1 minute and 5 minutes. Then everyone is screaming. You say, hey, that is not trading. You're not trading there. That is not trading. Be careful of these guys who call themselves spike catchers. Be careful of those people. They'll give you a very false perspective of trading. That's not trading. Spike catchers. What is that? What is that? There's nothing like that. There's nothing like spike catching in trading. So Boom 300, already we have an analysis. Already we are having an analysis. If you remember, we did an analysis for Boom 300. If ever you are attending and you're also going to back to the YouTube videos that we did for the Zoom, Boom 300, we had an analysis, and we actually have been having a bearish bias. Boom 300, right? If you remember what we discussed on Boom 300 overall, if ever you zoom out, this is a daily time frame, you zoom out, you see overall we've been going down. Then if ever you look even on the immediate market structure, this is the immediate market structure, you see that the market has been downtrending. How do you identify a downtrending market? By the formation of lower highs and lower lows. Lower high, lower high, lower high. So these lower highs, they were never broken. If you check what I'm saying, they were never broken. That is why I'm saying we are still in a bearish market. They were never broken. If you mark all of them, if you mark them, you realize that none of them were broken. The market never came to break this, 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 never came to break this. That is why we are having a bearish bias. So after having done that, we marked this lower low, this daily support as a lower low, as well as a target for the sales that so the sales, they actually started on this trend line. We had this trend line, right? Trend line. This was an entry point now. Crash, it dropped, retested, then dropped. After this drop here, after this drop and the break of this support here, support, drop, this drop broke this support. That was an entry point for the sell that one could have entered. Then the next sales, we actually marked them and we did the analysis already. We used the Fibonacci point A to point B, retracement, it retest on the 38.2, which is where most people, they entered 38.2. Once we enter on 38.2, first target 0%, next target -27, third target. So 3 TPs have been hit already for the Boom 300. TP1 0%, TP2 -27, TP3 -16.8. So 3 TPs have been hit already. But right now, maybe it can actually maybe come back and retest maybe these levels here before going all the way to the support where we're expecting. But so far, it has been moving our way very much. So right now, you can maybe look out for this level. If the market comes and rejects on that level, you can actually enter sell positions there. If ever it doesn't come to that level, you're looking forward to the next level, which is around this area here, where it broke. Because this support, remember, this support was broken, right? but a full retest never happened. This is a retest, but it's a mini retest. It's not yet a full retest. A full retest is something like whereby you break, look at this area here, whereby you break something like this. You break retest, right? This is a full retest, break retest, which is something that we always want to see in the market. So this broke right now. So the sell opportunities, best now selling opportunities, we can wait for the retest of this initial broken support. That's where we're going to get our selling opportunities. Target, we are targeting all the way to the support, which is a lower low. All the way to the support, all the way here. So, boom, 300. As of now, you can wait for either this zone and this zone. Me, I actually prefer this zone because this is the initial support that was never retested. This one was retested. If you check, broken here, retested. Can you see? Broken, retested. This support. Broken, retested. This one, broken. Right now, it's going for a retest now, which is where I'm expecting an entry there on the retest. There on the retest, right? Are we together?
Yep.
Right. So
Yeah,
if
boo.
ever you actually now want to be smarter, this Fibonacci, I can hide it. Then I can actually put another different Fibonacci, point A to point B. Okay. Like this. This one, what am I saying? I'm saying this was a complete move from this support. From this support, we never retested. Remember, this support was never retested. This one was retested. That is why I'm not really comfortable. I'm not really expecting an entry there. If ever it really gives us interest there, it's okay, we'll enter, but I'm not really expecting there. I'm expecting most probably this level here. Right? So B3, I think it's clear. Let's go back to C3 since it's almost almost on the zone. What is happening? Is it crashing? Right now it's 750, almost 10. Ah, wonderful. So this 15-minute candle, I would love it. Wait for this 9 minutes. Wait for this 9 minutes. Wait for this candle to close. Wait for this candle to close. Don't enter now. Wait for that 15-minute candle to close. Once it closes bearish, giving us something like this, right? We enter. Please, this one, once you enter, hold. Wait, if ever you feel like closing, wait for us to come back from church, then we'll tell you to close. But don't close as yet. Wait, right? I know some of you have a problem when it comes to, you want to close winning trades quickly, but when it comes to losing trades, you can hold those ones. When a trade is losing, people, they can actually hold a losing position. But when you are saying hold the winning ones, you don't want to hold. That's your problem.
Yeah, a very big one.
A very big one. So this one, once we get our confirmations right, please hold this position. Hold, please. We'll talk much when we are back from church. We'll talk about closing. We'll come back in the evening. In the evening, we'll come back and look at what it did. Did it break the trend line? It broke the trend line. Meaning, if this 15-minute breaks this trend line, we're not going to enter there, obviously. We're simply going to wait for this level that I marked here. If it comes and rejects on this level, we'll enter here. Once we enter there, look at what will happen. If ever it rejects here, we'll enter there initially. Then the next entries, we are looking forward for this trend line to be respected again in the future, because this is still a major trend line according to what we saw on the 4-hour. So what the 4-hour candle can do, this movement, it can happen. Because the 4-hour candle, remember, it's a 4-hour candle. It has 4 hours to close. You discover that on the smaller time frames, this market can come and respect this zone, but on the 4 hour, that can actually be a week. Then it closes back inside the trend line like this. That is why I'm saying there we can enter, as well as once it comes back inside this trend line and it respects the trend line, we enter again. So these are just other scenarios that we can have for crash 300. Because remember, they know what you're thinking as well. The same time you're analyzing, they also know what you're expecting. So sometimes they play around with the market because they're also trying to trap a lot of people. Right now, if ever it closes above, I want you to see what is going to happen. For this 15-minute candle close above. If the next 15-minute candle crashes back inside this trend line, we enter. If this candle closes above, it's okay, we won't enter. If the next 15-minute candle crashes and closes below this trend line, we're going to enter our stop loss above. Are we together?
Yeah.
Then if the market comes all the way to this resistance and rejects there, we enter as well. Then once it comes back inside the trend line and rejects inside the trend line, we enter as well. This support as well. This is also another good entry point that you can use. Once it's broken, this one, you can enter. Once it's broken, if it simply gives you a retest, enter. A retest is just a confirmation to say we are going. So the break, once it breaks, you enter. A retest is just a confirmation to say we are now going. We are going. So those levels that I've marked are my levels that I'm looking at. If this candle closes above, we are not entering the sell now. If the next 15-minute candle crashes and comes back inside the trend line, we are going to enter. I love what it is doing. It's actually crashing there. So this candle is 5 minutes to close. 5 minutes to close. We can wait for this 5 minutes, then enter.
Let's see the 30 minutes time frame.
30 minutes, I think it's actually the same thing. It's the same thing.
Oh.
I like what it is doing. It's crashing exactly on our trend line. It's a good one. That one is a good one. It's a good one. A good selling opportunity. A good selling opportunity. A good selling opportunity. A very good selling opportunity. So this trend line, guys, is there to guide you. It's there to guide you. Oftentimes, people, they put their stop losses amiss. And when you put your stop loss amiss, this is what happens. It comes, checks out your stop loss, then boom, comes back inside the trend line. So long this market is inside this trend line, we know that our selling positions are still valid. So long we are still below this trend line, our selling positions are still valid. So I'm just giving this just in case someone puts their stop loss amiss and they are taken out quickly and the market remains below this trend line. It will continue crashing down and you'll be outside. Then you actually be crying whilst you're outside. So take note of this trend line. It's there to guide you for your positions. So long the market is below this trend line, your selling positions are still valid. If it comes to this resistance and rejects there, we can enter. But if it comes back inside this trend line and rejects inside the trend line, our selling positions are still valid. This trend line is there to guide you and tell you your sales are still safe. That is what it's simply there to tell you. Your sales are still safe. So, meanwhile, it's something that is, yeah. So that is it. That is it, guys. That is it. Crash 300, we've analyzed. B3, we've also analyzed. I think those two are worth it. VIX already, we have an analysis already. That is why I'm not going there. So this is the analysis for Crash 300, either there or there we're expecting sales. B3, I like it's crashing there. So guys, this one we are entering. We are entering. Already you can actually start entering now. 2 minutes already. This candle is closing below. Already it's closing below. So we can enter, we can start selling our C3. We can start selling our C3. We can start selling our C3. So the zones of scaling in are the zones that I have marked. If ever you have the edge of scaling in, if ever you have the edge of scaling in positions, I've heard you saying that statement. Scale in here after the break of this support, right? First break here, you scale in. Next support here, break. Break, we want a break and a retest. We don't want a situation like this. Break, then the next candle, it has to come and reject on the zone, below the zone. That's where you are comfortable to scale in. Break, give us a rejection below our zone, then we scale in. Break, give us a rejection below our zone, then we scale in. All the way to our targets, all the way to our targets. So guys, C3, I think C3 I have explained more than enough for C3. So for today, C3 today, I believe today, it has to deliver. Today it has to deliver. It has to deliver accordingly. We can't spend our time, 30 minutes of our time for nothing. We can't do that. So it has to deliver. It has to deliver. So that is it for C3. That is it for B3. Then we'll just look at things from there. Then we'll see how it performed. At the end of the day, once we are back, we will just do a quick review of what it is doing. Did it respect our zone, whatever? Then we'll take things from there. It's crashing already. So guys, that's an entry point. That's an entry point.